have numbers coming in from Nifty 50 major Hindalco, and so far we have the first cut coming in the standalone year-on-year basis. Revenue has come in at 25,116 crores compared to 22,140 crores, which is an uptick of 13.5% on a year-on-year basis. We at ET now were penciling in this number to come in at 24,396, so looks like a very good beat coming in, at least on the revenue front. Net profit has come in at 1,561 crores compared to 1,412 crores, up 10.5% on a year-on-year basis. Now, we were expecting this number to come around 1,841. It's coming at 1,561, a miss on the net profit front on the first cut is what I would say. EBITDA has come in at very close to 3,000 crores compared to 2,220 crores, up 35%. We were expecting 2,770, so beat on the EBITDA front as well. EBITDA margins have gone up quite significantly at 11.9% compared to 10% on a year-on-year basis. We were expecting EBITDA margin at 11.4. It's come in at 11.9, a beat on the EBITDA margin front as well. So only the net profit seems a little bit lackluster and miss compared to the street estimates. Otherwise, revenue, EBITDA and EBITDA margin, they all seem like a clear beat. Let's pull up the chart of Hindalco and see if the stock price is also reflecting this move coming in on what we're seeing on the basis of earnings. Hindalco 0.5% higher right now. We did see a sharp spike come in when the earnings came out. That has fallen once again. So we'll try and connect with an expert to understand what Hindalco's first cut looks like. But basis of this, we understand that PAT seems to be a miss, but revenue, EBITDA and EBITDA margins seem to be good. They've also approved the acquisition of 100% equity stake in EMMRL, which is a wholly owned subsidiary of SL Mining and Industrial Limited. This for a consideration of 48 lakhs along with net debt value of 1,131 crores. So that's quite the debt that they're taking over basis this acquisition. But well, yes, an acquisition coming in for Hindalco, and they have recommended a dividend of 5 rupees per share. So that's the first cut on Hindalco. We'll try and connect with an expert, but in the meantime, let's move on and keep going with the show. Next earnings candidate, let's highlight JK Paper, because weak set of numbers coming in for JK Paper. If you take a look at the consolidated numbers, revenue has come in at 1,690 crore compared to 1,719 crore, which is down almost 2%. Net profit has taken a big cut, coming in at 77 crores compared to 278 crores, so that's down 72.5% on a year-on-year basis. EBITDA has also almost halved, coming in at 241 crores, compared to 416 crores, which is a cut of 42% year-on-year. Similar story for EBITDA margins as well. They've come in just at 14.3% compared to 24.2%. It's almost a 1,000 bips cut coming in on a year-on-year basis on the EBITDA margin front. So very weak, lackluster set of numbers coming in for JK Paper. That stock is lower by 1.5%. But I believe we have been connected with Aditya Welekar, Senior Research Analyst, Metals and Power at Axis Securities, to help us understand Hindalco's earnings better. Aditya, hi, good afternoon, and thanks so much for joining us. Give us your first sense on what you are making on Hindalco's earnings, because from what I understand, it's a slight miss coming in on net profit. Rather than that, everything looks better than what the street was penciling in.
Yeah, prima facie numbers looks good. It's as against our estimate on the top line. We see some beat of 2%, and then on the underlying EBITDA, we were estimating EBITDA of 8,800 crores, and that has exceeded that. So the beat has come from aluminium division. Copper is also a good set of numbers. The copper EBITDA run rate is about 600 million. So that is also good. Novelis has already reported, and that has come at 4,100 crores. So Novelis is it has already reported earlier. So overall, the numbers looks good. EBITDA is slightly ahead of our estimate and even consensus. So as was expected, means the EBITDA numbers are good.
Good, that's the first take coming in. Aditya, I want to understand a little bit more about this acquisition that they have announced right now. 100% stake in EMMRL, that's for a consideration of 48 lakh, but that's a net debt value of 1,131 crores that they're overtaking now. Give us a sense of how this is going to reflect on the overall debt book. How big is this debt to take over, or is it in terms of significance, how important it is?
I don't think that will move any capital structure of the company. Means the company's standalone balance sheet is quite strong with a net cash on its book. So this net debt of 1,131 CR, which they have announced, will not will not significantly alter any of it or any of their expansion plans which they have announced. So they have almost $10 billion of expansion plan, $5 billion each at India and at Novelis. And they have their net debt to EBITDA ratios defined for Novelis, India standalone and consolidated. So I guess this acquisition is within that line only.
Okay, so Aditya, I just want to understand something on the broader metal space. Since we're talking about Hindalco, we've heard news coming in from China that they've cut their loan prime rates this after a lot of time. Give us a sense of how this is going to be sentimentally positive, if at all, for the entire Indian metal space.
Yes, so the rate cuts, definitely those are sentimentally positive for the commodities complex in general. But at the same time, that indicates that China is looking to stimulate their economy and their domestic steel consumption specifically and metal consumption in general. That is slightly weak because if you see the steel exports coming out of China in the month of April, that has also exceeded 10 million tons. And the steel production in China is not declining significantly. So in the first in the first 3 months, the steel production is still strong. So overall, the sense is that the domestic consumption is China has to pick up. Until and unless that there will be some risk of the metal to spill over and the prices will be under check, especially for steel. For non-ferrous metals like aluminium, the prices are in the range of $2,400 per ton currently, which is a decent set of prices. And aluminium prices will be supported because of the 45 million ton cap on Chinese smelters. So overall, our view is on the metals is that both steel and aluminium prices, they will be range bound and steel prices will found support because of this 12% safeguard duty. So there is no significant downside risk, but upside to these prices, both for steel and aluminium, will depend upon consumption pickup domestically within China. And that is what is a key monitorable going forward.
Yeah, appreciate you joining us and giving us a better sense on Hindalco's quarter four numbers as well as the overall metal space. On that note, we'll let you go. But shifting